Oh, stream. Scared. Let's do it. So I want to talk to you guys about trading with the trend. Understand that trading with the trend is going to be trading with where the money is flowing. You have to trade with where the money is flowing. Think of the market like a river. If you're trading against the current or you're swimming against the current, what's there going to be? Counter resistance. It's going to be hard. So if the market's going in a heavy uptrend, lots of buying is happening. Lots of liquidity, lots of money is flowing into the upwards direction. And you put in a short and you notice market still keeps going in an upwards direction, you're swimming against the current. Stop swimming against the current. If you're doing that right now, stop doing it. If you see market going in an upwards direction, you need to be buying in an upwards direction. If you see market shorting, okay, then you need to trade with the trend and take shorts. Stop trading against the market. Stop trying to see market go in an upwards direction and be like, market's going to short exactly right here. And then try and plant something that's not even going to happen. Next thing you know, buyers are still in place. The breakout happens. And then price continues in an upwards direction. Why? Because the trend is so heavy. The buyers have stepped in. If it's an upwards trend on the higher time frame and it's real, it's going to be a heavy trend. Okay. Trading. It's the art of reading human psychology through price. Most traders fail because they look at the reflection and not the source. When price is the only really thing that matters. Where's price going? Is price going up or down? Price can literally only go up or down. Trading is quite simple when you think about it. Okay, everything else is pretty much a derivative. So any type of indicators, things like that, all delayed, not things you need. So let's talk about the cycle of money. So accumulation, right? Professional buying. Accumulation is going to be people loading up on things, people loading up on shares, people loading up on crypto. When people are accumulating large amounts of an asset, such as the government, many governments buying hundreds of millions of dollars worth of Bitcoin, for example, okay, accumulation is going to be when an investor or an investing class, such as a government, a hedge fund, and the hedge fund is pretty much just a bunch of people with a lot of money coming together investing, and they buy, okay? And markup is going to be letting you know that there's a visible trend, okay? And professional selling as well too, distribution coming into play, okay? Is market going in a downtrend? That's all it is distributing going on, okay? And accumulation is just a bunch of buying, people loading up on shares, cryptocurrency, whatever, okay? And the markup. So as far as certain things, you can wait for pullbacks, wait for support to confirm, and you could see breakouts, such as breakouts into new all-time highs to confirm the markup phase. Okay, a lot of the time that's going to be where the easy money lives, and risk is going to be the lowest. Okay, so if market is continuously breaking areas of resistances, okay, you can wait for market to pull back and buy each pullback until market comes back to the area of resistance, and you can continue to hold your contracts for a breakout if possible too, because you have to understand that market, in order to continue an uptrend, for example, has to break areas of resistances above current price or areas of support above current price. Okay, let's head over to the next slide. So the anatomy of an uptrend. So higher highs, plus higher lows equals a trend. So higher highs equals exactly what I talked about on the last slide. Areas of resistances, which is just going to be areas where market decided to sell off at. That's all an area of resistance is. And then you're going to have areas of support, which is going to be areas where market decides to buy at. And that's going to be where buyers are stepping in it. Okay. So sellers resistance, buying at areas of support. And you see higher highs, which means areas of resistances are getting broken into higher areas of resistances. Okay. See these areas of resistances, see how each one of these are higher, and then you're going to have the higher low. So look at this low, this area of support where buyers are stepped in. Then this low, buyers are stepped in. And this low is higher than this low. This low is higher than this low. This low is higher than this low. Okay, so whenever you see higher lows getting put in and higher highs getting put in, then you know price is trending in an upwards direction, inshallah. So certain things matter. Resistance is getting broken out into new highs and higher lows being maintained so price doesn't keep dumping down to the same areas of support over and over again. So it can actually trend in a staircase. So identify the last higher low. Higher lows are going to be good areas to enter, and that's going to be a really good pullback entry. And some people do find success in breakouts as well too. Find your bread and butter, find what you like to play, and play that. And as long as that low holds, then the trend is going to go ahead and be intact. And risk versus reward. So you might see certain things like on the risk reward tool, like 1 to 4, or you might hear terms like 1 to 2. So what this means is, let's say the 1, let's say you're risking $100. So if you're risking $100, then the 4 is going to be a multiple of that. So that means you made $400. So if your risk is $100, you made $400, your overall profit would be $300. Okay. So you always want to try and make double at least whatever you're risking. Okay. So if you're risking $50, try and at least make 100. If you're risking 70, try and make at least 140. Okay. If you're risking 1,000, try and at least make 2,000. And that's going to be a 1 to 2 whenever you're just catching the double multiple like that. And the strategy is only as good as the exit. So remember, as higher lows and higher highs are getting put into place, let's say you are trading in an uptrend. Let's say you caught a higher low entry, such as right here. You want to make sure you're closing at the area of resistance, most of your contracts at least. Okay, and then if you want to play a breakout, let's say you have 3 contracts, then maybe hold 1 contract for a breakout and see if price will continue. Okay, but don't be greedy and take profit. Target the next major horizontal resistance or area of support above current price, and that's going to be a trouble area where a lot of orders are going to be sitting. Okay, people are going to have what's called limit orders and bracket orders, which are automatic orders when price comes in contact with a certain area. Either price is going to sell or buy, because people know price is waiting to react at that certain heavy area. So if market falls down heavily from a certain place, people might have limit orders placed at that area of resistance if they're in buy, so price will automatically close. Or some people, which you, depending on the market, could affect you, could be good and sometimes not. Some people might have sell orders at the area of resistance too, expecting price to fall downwards. Okay, and structural protection. So your stop loss, it's an invalidation point. Okay, and if price hits it, your thesis was wrong. Accept it and move on to the next trade. Don't break your account structure and everything you've been working hard for because you want to have an emotional moment. It's not worth it, I'm telling you. Okay, stay focused, stay disciplined, and stay prayed up to God, and just keep working on your craft. Don't give up. It's really important to not give up. Okay, let's do it. Indicators, just trash. Okay, all of them in my opinion are trash. Okay, Everything you need to see is baked into the candlestick chart, which I'm going to cover right after we get over these slides. Okay. But all these RSI, MACD, stochastics, EMAs, barf. Okay. Trash can. And we take the indicators and we put them in the trash can. That's what we do. Okay. We grab the indicators. You get on your trading view. You get on your broker. You click the trash can on them. And you delete them. Everything you need is baked into the chart. Why are you looking at lagging indicators? It's not worth it. They tell you what already happened. Just look at the chart. Look at the chart and look at your higher time frames. Stay prayed to God and focus on your wisdom. Focus on how you're analyzing the charts. Focus on how you're feeling the charts. Okay. So the lag. Late data is going to kill your edge because you're relying on something that's already in your face. So stop it. A lot of people do that in life. A lot of people look instead of just doing and reacting. And it can cause analysis paralysis. Clutter clouds judgment. Instead of just being confident in the candlestick chart analysis mixed in with the economics with whatever you're playing, you're waiting for an indicator. Stop it. I used to be there. It's not worth it, I'm telling you. So, naked charts. Okay, just straight up candlestick charts, all you need. Indicators suggest reversal, and price action proves it. Stick to the source data. Stick to the actual candlesticks that are moving in your face, not lines that react off of the candlesticks later. Please don't do that. Don't destroy your account like that. Don't destroy your future's family profit like that. You got this. You're the breadwinner. You can't fail. Okay? And if you do, get up, scrape your knees off, and pray to God and keep winning. Don't let these indicators hold you back. Let's go. Simplicity wins. I'm going to show you guys how to read the chart with just candlesticks. No indicators, no squiggly lines on the candlestick chart. It's not making sense. Turn it off. Turn everything off. Okay, trade price, not the derivative. Follow institutional footprints. You can see it all. A lot of it's going to be baked into the higher time frames. Okay, stick to your weekly, daily, your 4 hour, okay, and lowest maybe your 1 hour, okay. Stick to your higher time frames. It's really gonna help you get that good edge and break everything down strategically. Remove the clutter, use your higher time frames, and use horizontal lines. Let's go ahead and continue on to the charts. So what you guys want to look at, man? Let's look at Bitcoin. So we're on the charts with it. Let's go ahead and analyze Bitcoin. So I'm going to show you guys two examples. I'm going to show you guys how to read an uptrend. And then after this, I'm going to show you guys how to read the downtrend. So a lot of the times the United States markets and cryptocurrency are meant to go in upwards directions. So US stock markets are meant to go in upwards directions due to the fact that the more successful that these worldwide companies are, the more taxes they're going to be able to pay to the US government, whether via business taxes or the more employees they're going to be able to hire since their company's on the stock market. And the whole reason companies list themselves on the stock market is so they can generate more income, which causes them to build more buildings, which needs more people to maintain. The more people, which means more taxes can be taken out of their wages, the richer that the US government gets. So it's really imperative that US stocks go up year after year after year, especially the big important ones that help the whole world. And cryptocurrency. Cryptocurrency is meant to go in an upwards direction because the creators of them, especially Bitcoin, is going to be finite, which means that there's a limited amount. Okay, so people are trying to buy it up, and there's a lot of imperative value to owning cryptocurrency and buying and holding. So let's talk about how to read the uptrend. So a lot of the times you want to be starting on your higher time frames first. Make sure you're not trading when price is already at all-time highs, okay, because then you're just going to go ahead and get pulled back on. It's not worth it. You don't want to get pulled back on. It can really just destroy your account buying at all-time highs. Buying after all the hype is done, you want to buy at pullback areas and then catch the sweep upwards, okay, back to the area of resistance above current price. Okay, so I'm going to go ahead and show you guys how to analyze the trend. So I'd like to go ahead and zoom all the way from the beginning. I don't like trading trash personally. I like to make sure I'm trading a trending asset, and I like to ask myself, does this asset go up year over year? Okay, if it doesn't go up year over year, I'm not even worried about the uptrend. I'm worried about if I'm trading something decent or not. Okay, Bitcoin, for example, I can see has gone up year after year after year after year after year. Okay, so in my opinion, this is going to be a good asset for me to trade and catch an uptrend on. If it doesn't go up year after year after year, if it's sideways, like if price action was like this, and then this, and then this, and then this, and then price was over here today, it's not something I'll be looking forward to uptrending on personally. Okay, but I could see price starts from here and decides to progress over time, and I like that a lot. Okay, I can see a lot of upwards projection value in this since year after year data is showing me that it likes to uptrend. So I can see price decides to burst up. So we started here from the beginning of time, price came up and it bursted up here. So buying started happening. So when you start seeing price heading up in an upwards direction, multiple green candlesticks, a lot of times is what I like to look for. Multiple green candlesticks on my higher time frames in a row. Okay, it's going to signal a lot of the buying. Okay, a lot of buying happening here. And price decided to top out right here. And then it fell down. Price decided to fall down and create an area of support. So let me go ahead and show you guys here. When price decides to fall down from an area, that's going to be called an area of resistance. And when price decides to bounce upward from an area, that's going to be called an area of support. Okay, resistance is going to be an area where price falls down from. Support is an area where price decides to bounce upward from. Okay. Then we could see this area of support. Price decides to bounce in an upwards direction here. Price decides to bounce up and stop again. So whenever I'm looking at an uptrend, I like to think of price moving in a V. V meaning that the top left of the V is going to signal the resistance. Okay. And the bottom of the V,
power off,
is going to go ahead and signal the area of support. So I'm going to have the left side of the V, which is going to signal area of resistance. And the bottom of the V is going to signal the area of support. Our goal, if we're catching an uptrend, is to catch the right side of the V. So on my higher time frames, I like to wait for price to make an area of support first. And if I get multiple green candlesticks heading in an upwards direction after price has already fell down, because that's going to let me know that sellers are selling. And then if I see price making a bottom and then buyers start buying, that's going to let me know that price is done selling and buyers have stepped in. Okay, price is not going to sell forever. And there's also going to be a lot of laws, especially on the stock market, such as the short sale restriction, which prevents a lot of things from just flash crashing to zero. So you can see here, price decided to create resistance all the way from here. And price decided to fill in and even break the area of resistance right here. Okay. And price decided to make a new high from here. Price decided to come up here and make an area of resistance up here. From there, price decided to make the left side of the V again, come down, bottom out, and make the bottom of the V. Right here. And then we see multiple green candlesticks going up in a row on the higher time frames, and the right side of the V being filled. Okay, we got the left side of the V, bottom, and then our job is to catch the right side of the V. Okay, so the later you enter on the V, let's say you entered like right here where that black line is, the later you enter in the V, the more confirmed. Um, the earlier you enter, the more profit you're going to be able to make, but more of a chance that you could potentially get burned. So it's going to be depending on the certain setups you take. So if you wouldn't enter like right here on the black line, if you're trying to close at this area of resistance, it's like not a lot of money left. But if you enter like right here, like that would be fine, or even right here, that would be fine too. Try and enter like halfway of the V, and then go ahead and close at the resistance. Yeah. And then you can see price decided to make a low right here. Prices had to come back up to the resistance. Didn't quite break it. It said, nope, gonna go ahead and reject again. We came down, and then we bounced at this low here. So this low is higher than this low. And then this low is higher than this low. And then we can see the V right here being filled in. Again, just like the V here filled in, V here filled in. Okay, and price will continuously do that. And you can also use your daily time frame to go ahead and plot out trades too. So even if I delete something here, and I just see this trend, I have the bottom area of support right here. We got another area of support right here. Then we got another one right here too, C being generated. Price making higher lows. Price is making higher lows. See price uptrending. Yeah, it's going to be a really, really important thing to look at. And you can see these V structures being filled in. So top left of the V, price started here, area of resistance was formed, price came down, bottomed out. Then the right side of the V got formed, resistance area got broke, price came down, did the same thing again. Price bursted up towards this area of resistance here. Came all the way down, made this area of support, and did the same thing once again. Okay, could see price deciding to progress over and over again. Okay, and we're coming down here. Looks like it's trying to hold a new low, and we could potentially see over time if this low will remain higher than this low here. Okay, and if so, that's going to be another verified area of support. I like the multiple green candlesticks here on the daily. On the weekly here, we do have some sideways weekly candlesticks that are green. So we'll see about another week here too. Okay. So higher lows and higher highs are going to be something to look at whenever you're reading your uptrend. Let's over to the downtrend. Devin, what's up, man? For real. Um, what I want to show you guys. I want to show you guys some Forex. Actually, this isn't the best example as well too. The $100 coin move. Wow, what's going on with them? No, I'm bro, man, for real. I got tired of doing that. Couldn't take that no more. I'm not gonna lie. This having a good pullback. We'll cover this before we get into higher lows. We IPO'd resistance up here. It's like price sweeping in the upwards direction here. Price might break this support. This little pullback is probably upsetting buyers. Some things I want to look at too. Yeah, still so much selling right now. Red weekly. Wait for buyers to step in. How many days did that take? This took 9 days. These are probably expensive. A month. That's not the worst. All right, let's talk about downtrend. Let me find something that's terrible. This is gonna fill. I think we looked at this the other day. So I like this weekly wick right here. It's probably a retest wick. Nah, it's not. But this is filling here too. Actually, hold on. Let me see this on the daily. Let me get on the 4. All right, never mind. Yeah, it just likes that buy area. Never mind. It's a mirror. I see. Look for these too whenever you guys are trading. That's why it's important to scale down too. Probably a daily. Yeah, look at that. You can always break it down too. It's daily support mirror here. I understand why price likes that support. Price is never just doing anything. It's never just random. It's always a reaction off something that happened in the past. Yeah, price is definitely gonna go ahead and fill this V here. We got one green daily. So much buying in it though in these 4 hours. Probably get a pullback tomorrow off of this resistance. And then buy the pullback. Off of this. Yeah. All right, cool. All right, let me talk about downtrends. You could really buy here, but I don't know how you guys feel about drawdown. It's a lot of buying here. I'll wait for selling first and then buy again. I don't like drawdown. I'm not a drawdown kind of person. Unless it's like some trade I don't like care about immediately and I'm holding for years. And I don't really care about profit on those then. If that's the case. I'm just trading that for ownership like Bitcoin. I don't care where I buy my Bitcoin. I just trade for ownership. So I just buy wherever. And you guys can get on the WAP as well too with my other clients to see my trades. Second. Let me find something at downtrends for you guys. Definitely not any US involved things. JPY. Dang, I didn't mean to like, dang. Look at me slamming on some Forex. I think I marked this out a little while ago. It's like enter right here. I don't know. I think I marked this out for a student or something. Your USD. I keep choosing USD shit. Okay, wait. That I want a heavier downtrend. Oh, let me show you guys oil, man. Oil is crazy. Oil got it. Oh yeah, this is a great example right here. All right. Or natural gas too. This is a crazy. Whoever shorted this is like a billionaire. Like if you shorted this like a year out, especially from this topic right here. This easy right here too. Support. And then you have TPF. Support into resistance. And then into resistance again. And then yeah. Could have bought like a confirmation down here. You could have even bought this. Could have bought this entry here. This resistance entry could have bought like right here. Stop loss of the highs and chunked it down to the support. Support got filled. So the specifics really matter too. I'm gonna show you guys a cleaner example that you could see here because this is a lot of sideways price action. All right, let's go ahead and talk about analyzing the downtrend. So when you're analyzing a downtrend, you want to be looking for lower lows and lower highs. Okay, so let's go ahead and let's talk about it. So, you know, we had a good run. It's been uptrending for a while, but since then, it's been trying to head down to the graveyard. So let's analyze and break down how you can catch trades when price is heading in a downward cycle. So you can see price here created an ultimate area of resistance. And resistance is just going to be an ultimate area where sellers are coming in. Okay. Sellers are coming in to this area since price is falling down. Then you're going to have price making bottoms. Okay. Once again, that's going to go ahead and be areas of support. Support is going to be an area where buyers are going to be stepping in. Okay, you're going to have support and then you're going to have resistance. They both correlate. And the cool thing about them is resistance sometimes can be broken and turn into support. And a lot of times support can be broken and turn into resistance. Just as resistance can mirror another area of resistance, even if price decided to previously break it. Say, for example, price decided to create an area of resistance here. Price broke it, came down. Price could still come up and short at that resistance again. Same thing with an area of support. Price decided to come up, break below the support. Price could come above the support and pull back at the same support again. Okay, price is very reflective over what happened in the past. Okay. So let's go and let's keep analyzing. So you're going to have the area of resistance where price decided to fall downwards from. And then you're going to have the area of support where price decides to bounce in an upwards direction from. Okay. Both important areas to look at. So resistance, just like I said, can sometimes be broken and turn into support. Support can sometimes be broken and turn into resistance. Okay. Keep all that in mind. And put it all together on the charts. So a lot of times when I'm downtrend shorting, I'm looking for two things. I'm either waiting for an area of resistance. I don't even care if it's in the past. To meet up with an area of resistance and I'm taking it again. Okay. or I'm going to wait for an area of support to be broken and turn into resistance. Okay. So let's find an example here. So let's say price decided to make this area of support right here. Could see price decided to make this mini bounce after a heavy downtrend from a while. Okay. After that, price decided to hunt back up to this area. So look at this support zone right here. Price decided to bounce up for a little bit here. Okay. To this area of resistance here. Okay. And even this area of resistance right here. All right. Sometimes you'll be able to look to the left and be like, okay, I see why resistance was created here. Okay. So for instance, if I drag it all the way over here, we can look to the left and we could try and piece things together and see, okay, was there any price action that reflected? So I could see this area of resistance here. And if I zoom in close, I could see another area of resistance right here. Okay, so stuff doesn't just happen for no reason. You could see the two areas of resistance both cause price to fall downwards for a while. Okay, very, very reactive market. So stuff even from years, months ago, okay, could be reactive. And even right here, price decided to create support. Price broke it and turned it into resistance. Support right here got broken, turned it into resistance, and then price headed in a downtrend. That's going to be one of my favorite ways to downtrend. Is going to be waiting for support to get broken and then waiting for price to run back up to it and turn it into resistance. A lot of the times if you see that, it's going to be a really, really good short or a good time to short. And even if you see two areas of resistances meeting up with each other, it's going to be a good area to short at as well too a lot of the times. Okay, but be careful with that, especially during uptrends. You don't want to get caught trying to short something that's not meant to be shorted. That's in a clear uptrend because you're just hunting for something. Okay, so that's why I like to wait for support to get broken and turn into resistance cleanly, whether it be it on my daily. A lot of the times I'm gonna wait for it on my daily because that's gonna give me the cleanest structure and what I'm actually looking for, making sure it's confirmed, because I don't want to be taking any type of nonsense trades. Okay, you don't want to be wasting your funds. You don't want to be wasting your time. You want to try and take the trades you know are going to be making you good money. Okay, and waiting for confirmation is also going to be really, really important too. So just as you're waiting for, let's say, an uptrend, I like to wait for 2 to 6 daily candlesticks going in an upwards direction to the right. If I'm waiting for a downtrend, I'll wait for 2 to 6 red candlesticks going down just to make sure. Okay, I don't buy the first immediate reaction a lot of times because I don't know if it's going to be completely true. So let me go ahead and pull up an example here on natural gas. Okay. So even here on natural gas, we could see price farming this downtrend here extremely, extremely heavily. Okay. And certain trades can be found by just being patient, okay, analyzing the market, and really just taking your time. So even right here, take this area of support. That was very important. I like to look at very important areas of support, especially on my higher time frames. You can see price decided to break below it. And we could see a daily wick right here. After that, I got 1 red candlestick, 2, 3, and then we got price heading in a downwards direction. Okay, from there. Okay, and you could have did take profit at like this support here, or even this support right here. Okay, and caught that good trade down. Could enter down here, take profit here, and that would give you about a 1 to 2. Okay. So taking your time with the setups and analyzing everything, it's really going to be important. And when you're downtrending, a lot of the times your take profit is going to be either an area of support above current price or below current price, not above, an area of support below current price, or an area of resistance below current price too. Because just like I talked about, resistance can turn into support. So when you're shorting, your take profit can either be resistance or support. Same thing if you're uptrending too. So yeah. So say here, price decided to create a little buy zone right here. Price bounced in the same area 3 different times. Price broke it, and then price hunted all the way up to it, shorted, and then gave us 1 red candlestick. 2, 3, I like that a lot. You could have did take profit at like this support right here, and you could have went ahead and caught your trade. Okay. Boom. Could even take profit down here. And then the amount of days this would have took, you can use your ruler tool on trading view. Can start on the resistance, drag it to the support. Okay. It took about 90 days, but that would have been a real account flipper. Okay. A lot of the times it's not about getting a trade over and over and over and over again. It's about just taking a couple of good trades. Okay, a month, a week, or even a year sometimes. Even if you did right here, this resistance to the support took about 14 days. So if you did a smaller take profit, it would take less time. So yeah, so cool. That's gonna go ahead and be that. Stay praying to God, keep grinding. Catch you guys in the next one. And I pray this helped. Head over to stackmode.net for all trading education. Peace. Stream. I'm gonna catch y'all, man. Thank you guys.